Hello and welcome. We are doing some live financial modeling. Let me send out the tweet real quick to Twitter. And we'll get started on the security monitoring services model. We're going to do all the interlinking of the three statement model. So yesterday I imported all the different tabs, did all the new tab names, did some formatting on the colors of what's editable. We did integrate the full inventory logic. Uh, and so today we are going to do interlinking of all these income statement, balance sheet, cash flow statements, which are collectively the formal financial statements, which will all update as you enter and adjust any of these assumptions of the whole model. As you know, I've been doing startup model upgrades since January, and we're on number, I think this is the 18th or 19th one I've done. You can see it is part of the SaaS financial model bundle, the one we're doing right now, number 5, security and alarm system and services business. And it should be done today. I should be able to finish all the logic. We're going to do uh, get the cap table in there, all the references, all the sanity checks, and finish it today live. So that should be great. Don't forget to check out other financial models and templates I've done over the years. A lot of advanced logic here. If your organization uses Excel or Google Sheets, there's a ton of value here for a lot of different uses. I've got tools specific to accounting, HR, um, some lending models, general lending businesses, real estate specific value, mixed use, self storage value add. This one's actually really awesome. It's got the whole unit mix, a whole bunch of stuff so that the user can just plug in high level data and really cool logic there. We've got joint venture cash flow waterfalls. And again, don't forget to check out all the templates on the financial models tab. You can buy them in bulk you can see the color code key for the different levels. You could buy like mid-level, 10 mid-level, all the mid-level, all the intermediate, or just buy all the templates on the site for $9.99. I probably spent $200,000 in billables building everything here, so it's just a lot of value. Very, very useful stuff. So without further explanation, let's get into this. So we left off with inventory. We're gonna now, I think we're ready for the income statement. So what I want to do is obviously for the first things we want to know are top line revenue numbers, which if we go to our monthly detail, this is where we're going to pull most of the stuff. And we have a couple revenue sources: installations, service calls, and the recurring revenue from the monthly monitoring service fees that the business will be charging. Okay, and I just want to perfect. Perfect. Okay, yeah, that's the right calc to do for these. Perfect, perfect. Okay, so we can pull that here, which is just referencing each of those tiers. All right, good logic there. So we'll pull ending MRR, installation revenue, and service call. So 3 items. That means we're going to have to expand this to 3. So we have installation revenue, installations, uh, service calls, and monitoring service subscription. All right, so installations will be there. Service call revenue is here. And monitoring subscription is here. Let me sum all this up. I'm hoping that at addition of the new row here, we might, yeah, dang it, actually, yeah, we're going to have to adjust the lookups on the depreciation. That's okay. It's definitely doable. It's just got to remember to do that, or else we're not going to balance on the balance sheet. All right, so there's revenue, cost of goods sold. What do we have here? So monitoring, we want to separate out, well, these are already separated out, the equipment purchases, because you're installing equipment, you're going to be buying that and then reselling at a higher price, so there'll be some cost of goods sold on that, and then other cost of goods sold. So we have 3 items here as well. The inventory exclusive, so we can keep this. We're going to need that row. So this is the only cost of goods sold that's requiring inventory. This is a service fee, and this is just other. So on here, I'm going to go, what are we going to call this? Monitoring and other. And then this is equipment. Monitoring equipment. Okay, so monitoring and other costs, we can add up this and this. Monitoring equipment is the inventory one. We'll go here. Okay, so I didn't have to increase any rows. That's good. Now this cost of goods sold to inventory item, which is going to be this, is going to drive the inventory balance on the balance sheet, the cash flow statement to figure out, because the cost of goods sold, this will be zeroed out, and then the actual purchase of this equipment, which will happen in intervals of however many months you define here. So you can see every 3 months we're buying some. So that's all interconnected. Gross profit. And remember, the revenue tab is where most of these inputs are going to drive those margins and purchases and everything. All of this logic, which I went through a lot of this stuff yesterday. If you want to watch that live video, that has more of like how the base assumptions work. Operating expenses. So here, so pretty simple, sales and marketing. We have those separated out. G&A here. R&D. Do we not have R&D? G&A, cost of goods sold. We have G&A. Okay, so we just have other costs. So no R&D in this model, which is fine. There are other OpEx, which would be everything else. So we got these two. We need labor costs plus, what else is here? Other costs per location, service call, labor, credit card fees. Okay, so all that, yep. So that's all our other OpEx. And then startup costs we'll just reference right here. Drag this over. Now we have EBITDA, interest. It's good. That's a good calc. Now depreciation on this be building or vehicle purchases. That seems fine. The issue is going to be on the balance sheet when I do the lookup. I have to adjust all the rows down one since we added a revenue row up here. Then we have other things for sale business, figure out taxable income, income tax, and then net income. Now, technically, in between here, you could put operating profit, which you would take EBITDA minus interest minus depreciation. You could do that if you want, but I just jump straight from EBITDA and then to net income. And then that flows to retained earnings. So that's good for the income statement. This other stuff we're going to worry about later, because this is mostly with the terminal value. Okay, so income statement. This is fine. And so monitoring service, last 12 months revenue, yep, that's what we use for the run rate or how we're going to value this business, so that's fine. We can keep that text. Now, income statement annual, we got to add a row. Update this. Cost of goods sold. Did I add? Oh no, we just have those two. Okay, good. So that's fine. All right, and then we balance. Nice. Okay, good. Thank goodness. So 60, 60. Yep. So that matches on the annual. That's good news. Let's go now to the cash flow statement. We got customer receipts. So this is revenues. This is going to be 10. So it's 10. Yep. Payments for inventory. Again, now this will be different. So payments for inventory. This is just going to be negative. We already did the calc. It's going to be right here. That number. Okay. Customer receipts, payments for inventory, other OPEX. So let's make sure this is catching everything. C26 and C14 of the income statement. No, we need, oh wait, yeah, C14, because this is already above it. So we just want this number, so 14 and 26, I think that's what it was. Yeah, okay, so that's good. Interest and 32 and 59 for taxes. Yep, and yep. Okay. So operating activities, cash flow is good. We're gonna have to add the taxes to. We'll have to add a couple of these things to the monthly detail to get that cash balance to match, and that's actually very relevant because one of the main purposes of the model is going to be deriving the minimum equity required so the cash balance never goes below zero, and that's going to be based on the cash flow from the monthly detail, which then will flow back into the balance sheet as equity contributed, and will be important for everything to match. CapEx is fine. Terminal value, so this is a update we probably need to do. So terminal value D9, let's look at that. So D9, based on that. 12-month trailing revenue, so that's 10. Oh wait, that is fine actually. Times the multiple. So this is valuation, and then we got some going to cap or fixed assets, some going to extraordinary income, which is just a tax thing. Again, if you don't want to deal with the taxes or you don't want the model to produce anything with taxes, you can always zero those out here on the global control. So if I zero those out, you see the income statement just doesn't have a tax amount in there. And that's fine. If you don't want to show it, there's a lot of reasons why you would not or don't need it for this, but it's in there if you want to see. Sale of business. So this number's good, and this number's good. Debt, principal. So the sale of this is the next big number. So cap table. So this is what I was just talking about with the monthly detail matching. What we need to do, and this is why it's so nice. I picked a model that already had the inventory logic in here. So our balance sheet should be pretty, yeah, nice. So this is all working already. And then I believe, oh wait, I might not actually have to do an update because this section here, 35 to 50 is, oh wait, accumulated depreciation. So this automatically updated 35 to 50. I didn't have any H lookups going to there. So I think we're good on that. I actually don't need to update anything, which is a good. All right, let's go to the monthly detail. We're just cruising along here. So this CapEx, again, we're not going to need. We can delete 190 to 216. What's hidden here? We don't need this. Oh yeah, that was logic trying to do the equipment stuff dynamically here. Yeah, we don't need that. We'll put some other stuff in there. 245. Let me go. Did I try to do this here too? No. So what did I delete? 187 and then 194. So this, and then delete to 190. Oh wait, this will be in 194. 8794. Okay. Well, 214 is startup costs. Yep. So 218. What do I have here? Oh yeah, we gotta unhide this. So this was me trying to do logic before I figured out I can do it right here on this inventory. This logic here. So now we have equipment purchases. We're gonna have to add in taxes. Um, Debt payback we do not need because that's just going to be in the regular amortization with the new logic we have. Debt balance is fine, whatever. It's also going to be in the balance sheet. Funding. I'll put this to the first month of the forecast. It purchases, taxes. I think that's everything. Oh, no, it's not everything. Exit proceeds, and we'll go fixed assets plus sale. Let's just do term. Actually, exit proceeds can be its own thing. Let's see what else. So this is, I'm just doing a rough version of what's here formally, and this is why I'm doing income statements, because this is a formal way to look at what I'm doing on the monthly detail right now. So we got this, that. This is a output result of what we're doing. We have CapEx. Oh wait, did I add CapEx? No. CapEx. And these two are combined for exit value, taxes. So notice here we're not just pulling net income from the income statement. We're actually basically rebuilding the income statement, but only pulling items that affect cash in the period, which is the revenue collected, when you pay for inventory, operating expenses, besides not counting this here. Because this row 15 is actually expressed on a cash flow basis right here with the timing. And then interest, taxes. Yes, there could be more things with taxes, like you're paying quarterly in the next year, but in general, the idea is if you're even going to show taxes, the reason why I have it in there is because you can see kind of a net effect if you want to account for some effect of taxes on the cash flow. Not all situations need that, but that's why it's there. So I just have it in here. It's basically happening in the period. It's amortized out over 12 months based on the actual period the tax would accrue in. All right, let's go back to our monthly details. So taxes is going to equal taxes here. Exit proceeds would be these two summed together. And then CapEx is just this. Another good thing about the three-statement model is it really gets you organized, it checks everything, it always has to balance or else you know something's wrong. So it's why we're adding all of that to all of these starter models, because I think it's worth it to make them better. All right, now this calc for actual cash flow for the period is going to be EBITDA. Let's think about this. So if we do EBITDA, EBITDA is including equipment purchases. So we have to add this back and then we'll subtract it back out here properly on this one. So this plus equipment purchase, and then we'll actually subtract out startup costs. Let me go in order. Debt service, startup costs, equipment purchase, taxes, add exit proceeds, CapEx, add this, and we don't need investor funding on here. We'll do the annual after I get this going. Okay, so that's the number. Now we should be able to drag this over and get a proper min cash requirement, and that's going to go into the cap table as the amount you need to have between either owners investors or all owners. Okay. Looks good. And again, my numbers are arbitrary. When you go to fill this in, you put your own information and assumptions. In this case, we're actually not even breaking even on cash until we actually exit. Let me add in. So taxes, and then some that we can just. What am I missing? Anything? Let's update this. Nice. So that 6364, 6364. So we got all the numbers in there match. These are just ancillary calcs for the visuals. We don't need this. Actually, we don't need any of this. That will be on the balance sheet. So if we go back to, let's see, cap table. We don't, wait, why is this saying 0? Oh, so we have to update this. This is 230, not 211, to show the min cash needed, so 2,149,000. We're saying most is coming from investors, some from owners, and then we're defining the share, ownership share over here. Okay. And on these, I just put an overflow on the cap table. You can put in any investor amounts here, any owner contributions here, and then anything left that's you haven't reached this number yet will just pop into here automatically to make this summing a little bit easier. But again, you'll put in actual information here, so your information should zero out. And there's some checks down here to make sure these should all be 0. So you're not issuing more shares than you have or giving more percentage share than is available. So this is good. This is good. Now the real test, we're actually getting close to being done. The real test is gonna be, oh man, this is why using templates are so good. Like this normally would have taken me 6 hours probably to do from scratch, and now it's only taking me what 2 sessions of like an hour. Just update that a little bit. So these charts look good. Nothing looks out of line. Actually, this does a little bit. We might. Now this is cool to see the churn lost and downgraded, expansion MRR, churn MRR. So this is kind of cool to see the net MRR, and if it's negative, it's actually expanding. That's cool. Or no, that's net MRR. The real churn rate is negative. If it's a negative churn rate, it actually means you're getting more from your existing customers each year than you're losing from the customers that leave. So negative churn is really good. All this stuff. Very good stuff here. We'll have to update the executive summary distributions. Now my question is, why in the world is this distribution summary up? Because here. So this percentage for investors should be pulling from rate here. Fully diluted ownership value of the outside investors. And then owners will just be 1 minus that because it has to equal 100%. Update the formatting here. So this is the project level discounted cash flow analysis, net present value, and then the investor side, owner side. We need to update this. So remaining equity to use should be the total equity for the project minus anything in year 0, which is startup costs, plus financing. Otherwise, it's going to be in the other month 1 through 60. Will flow through on the monthly. We don't need to calculate that here because it'd be represented in this. Make sure. So this is 229 on the monthly detail. Yep, that's a good one. Contributions. And this would be just the total equity, this number. Oh yeah, and then owner cash flow. So this is obviously going to be updated. Cap table. There's a total for the outside investors, and then this is total for inside. Perfect. That should all line up. This plus this minus this. This should always be 0. And then this total should equal the cash position 6364,120. 6364,120. Perfect. Okay. Executive summary. We'll do this real quick. So EBITDA, add back equipment purchases. And these are, so on an annual basis, these are actually the same. Well, let me make sure there's not a reference issue. So add back equipment purchases per year, which is that. Hold on, we're doing those starting in year 1 only. And then the timing. So timing is only relevant on a monthly basis. It appears here, which is fine. It's very important for the first 12 to 24 months of cash flow planning, though. When you have those big amounts coming out every few months, you need to see how your overall cash flow is affected. So that's why we have to do the reconciliation here. Real quick, I just wanted to check the balance sheet. So yep, 0 is what we always want to see, never below that. That means all our calcs are working. Balance sheet's balancing pretty good. All right, that's awesome. CapEx is now in this. Debt service, we don't want this on here, and we don't need this. Taxes. Negative here. Loan proceeds, exit. Startup costs, investor funding, debt service, capex. Okay. Let me make sure. So I already removed the tax row that was already here. Yeah, we don't need this tax helper anymore. Okay, perfect. We also want to check some of this minus our cash position here should always be 0. Lots of sanity checks on these models where you've got a lot of stuff happening on different tabs, and it's important so you can trust your numbers are actually at least making logical sense. This is fine because I didn't import it, so it's already referencing the right numbers. 25, 170, 36. I'll give these a decimal. I believe, so 8.5 and 2, 149. 6.3, 64. Oh wait, we might be missing something here. So CapEx, we're off by a bit of something. Let me redo the formulas real quick and make sure it's not anything with that. So here, add back this, subtract that, subtract, subtract, add, subtract, add, add. Okay, that's a lot different. Well, let's see. So we're out. If we sum up, or if we just do this number minus our annual detail, 2,080,000. Now, what could that be? It's not anything here. Let's get the cash flow on the annual in here and see. Oh, whoops. Missed the taxes there. Okay, and then 250. Investor funding we don't need in here. There we go. Perfect. So that matches. And then, yeah, this minus this should equal the 6. Yeah, there we go. All right. That's done. This is done. Now the visual will make sense. Yep, much more sense. Awesome. I think we're about good. Let's do the final sanity checks. test a bunch of different timing assumptions to make sure the balance sheet still works, because that's the only thing that ever had an issue. And then we should be good to go. It's good. So those sanity checks are really good to feel confident about having your cash flow, like all these different things matching up with the other data because this other data on the monthly and annual detail is what's actually referencing all these assumptions, and then that's just going into these. So making sure these all match and all that zeroes out gives you a lot of comfort and peace of mind when you're building this model and using it and when you start to change some of the assumption numbers around. All right, annual net income to monthly should be 0. We're referencing H60. Looks good. Next one, balance sheet monthly, summing up row 60, balance sheet. Yep, 60 there. On the annual, 60, okay. Good, good. Annual check against monthly detail. That's this one, should always be 0. Annual detail check against monthly balance sheet. This is a little bit more tricky, but so we're indexing balance sheet cash flow, cash position here, and we sum or subtract it from this number, and then subtract the actual equity because that's not in the cash flow requirement, and we are good to go there. Executive summary to annual detail. We did that calc. It's just this right here. Distributions to annual ending cash flow. Let's see. So that's good. And then individual distributions. Okay, let's go to that real quick. Yeah, this is off a bit. We got to adjust. So here's 10. We are in 10. Oh wait, that's good. All right, so what are we out? This minus C25. So total for insiders 131. This is 60. Oh, do we mix these up? Investor cash flow equals cap table. Here we did. I did. What did I have 33 in there? Yeah. So I used the check value, which is actually I used this. I should have used this, and that's why we have this check right here, because that showed me, oh, there's an error, and there was. The distribution was backwards, the percentage of cash distributed to each. So now it's not backwards. And you see the importance of sanity checks. And when you're doing this for lots of money and people are paying you a lot of money, you need to make sure your calculations are right. So sanity checks help just for that reason right there. All right, now we are balanced. 1725. So in this aggregate too, so C260, 160 should match this. Yep, and then 7.6 for the investors. Yep. All right. So aggregate matches. Each individual is lined up and matches the cash flow. So this is good. All right. Let's see if our sanity checks are good. All I'm going to do is change some of the dates. This is what always is an issue, or if there is an issue after I've done everything up to this point. This is the only one. So let's try a partial end month. Good, all zeros. Can I see all these? Nice. Let's do, no, actually, let's do all these, assuming there is an exit. Go previous year. Good. Let's go partial. Nice. You will not believe how much work it took to make the balance sheet and everything always balance when you change the dates up here. It was not easy to get the formulas to work dynamically no matter what you put in up here, but it does work now. Now let's assume there's no exit, zeros, end months there, partial, good, and perfect. So this allows you to end a template on any month. Let's say I ended it in September 2026. Or maybe I made it a 3 year, so 23, 24, 25. I just wanted to show 3 years of operations, and I wanted to show no exit value. So I do that here. Now if you go over to the income statement, wait, how many years did I show? 22, 23, I need to end this at 2024 to be 3 years. So if I go over to the annual income statement, I can see only 3 years show up. Good. That's what happens. There's no exit happening. Balance sheet ends after year 3. Perfect. Balance sheet annual. And this is fine. The cash just extends, but it doesn't change. Same with owner's equity. That's fine. It still balances out. Cash flow, only the first 3 years. Distributions, perfect. So everything's working dynamically. That's very good to see. Everything is dynamic. Okay, awesome. This model is really cool. I always like to go back and just see, like, I just like to see everything working in these. They're just so nice. Just putting all these back to the top left, so when somebody first uses this or opens it up, they're not on some random column and down 100 rows. This is all good. We can hide this. Just that. All right, man, we're cooking with gas here. Oh, let me update. I don't think I made some of these boxes the light line style that I like now. Let's see, test schedule. CapEx is good. This is good. Good. Costs. Yeah, let's update all these line styles. I like the lighter line style. Oop. Remember, you can hold. Dang it! You can hold Control down and do all these at once. I just think that looks a lot cleaner having the lighter border line style. All right, it's the same thing with revenue. Just clean this up and we're going to be all set here. Remember, you can buy this template at smarthelping.com. It's the number 5 option on the SaaS template tab. Or you can just search for security monitoring on the site at the top. It is a one-time fee of $125 to buy this, and I think it's a really, really good value for what's going on here. If you're trying to start up this business and figure out what cash you need and what pricing might mean certain things for cash requirements and feasibility, it's all very good stuff here to plan out. Okay, that looks good. Let's do a final, make sure there's no .xls in here left over from the import. Oh, so we'll search the whole workbook for anything that says .xls. Nothing's there, that's good. Now I'll just update the index tab and I'll do the overview video about this whole template tomorrow. I like to do like 7 to 10 minute overview videos so that people understand all the updates and what it does in a quick way, because these long form, hour-long streams are great to learn about it, but it's not efficient if you just want a quick view of the template. But yeah, this turned out great. I'm really glad I had the inventory logic already from the other model. That made this a lot easier. Everything went really smooth actually. So the next one, so later this week, what I plan to do is I'm gonna build a SaaS customer pricing tool that allows you to have like 10 different options, and you can determine like all the configurations for each customer type and figure out which customer type has the best net present value, best cash flow, with a bunch of different options. So it's like if you're gonna build an enterprise SaaS or regular month-to-month SaaS or whatever, just customers that have some retention rate, have some recurring revenue amount, and then you possibly have some cost to acquire them. They pay some amount of revenue each month, and then you have some ongoing cost to maintain them. All of those different things can factor in, and you can test different assumptions for contract terms and how you want to set it up. What you think the retention will be on different terms, all kinds of stuff. So I'm going to do that on probably Thursday and Friday. Uh, I'll get the overview video done for the security monitoring model. I'll get that done tomorrow. And we'll go on next week. Let's see, what are we upgrading next week? Let me look at this log here. So we did this. Self-storage is not going to need that. That's more advanced stuff with the cache and waterfall. It's not really going to fit into a three-statement model. Automated kiosk. So that'll probably be, that's a 3-year forecast. So that one, then we got food truck, then a general rental business. So these will be good. Then we'll keep going. We'll have, let's see, what's after that? Then the enterprise SaaS one, that'll be great. Janitorial cleaning services. Jewelry retail store, that'll be a good one. Dry cleaning. Lending business actually already has a 3-statement model built in. Auto repair center. So we're working our way down here. We've already gotten through, you know, all of the top, all of the startup models through, where is this? Through here. So all the startup models that are in this top, whatever this is, 35, have been updated. Not all of these are startup models. I do all kinds of different things. Accounts receivable, payable, some what cash flow waterfalls, inventory tracking. So those obviously don't need a 3-statement model, but things like product as a service, freemium, mobile app, uh, car wash, equipment rental, 5-year SaaS, all those got upgrades. Marketplace, gym, lending as a service, mining, used car dealership, all these have been done in the past stream since January. So we're just going to continue on grinding here. I'll see you guys later. Don't forget to check out smarthelpme.com. Again, you can buy templates in bulk, or all the templates on the site for $9.99. Really tons of value. And I will be back again tomorrow. Will just be an overview video. Then Thursday, Friday, I'm gonna do that customer configuration, SaaS stuff. I might live. I think I will live stream building it. So that'll be fun. All right, guys, take